Listen, have you ever looked on the charts and felt like this is way too complicated? I just don't get it. I don't get when price goes for a buy. I don't get when price goes for a sell. How am I supposed to understand this thing? Now, if that's you, I really want you to zone in on this video today because I'm going to be breaking down step by step how you actually can tackle the markets even if you're a complete beginner and you've never placed a trade before. So I want you to lock in on this video because by the end, I'm going to convert you into more than a beginner. So make sure you've got your notepads and your books locked in because... Did I just say notepads and books? I mean notepads and pens and iPads and all those things that you make notes with so that you are able to actually take some knowledge away from this. So come on, I've got something to show you. Hey All Stars, welcome back to All Stars Trading. If you're new to this trading channel, I'm Kerry and my mission is absolutely simple. It is to help you trade smarter, help you to protect your capital and help you to find consistency within the trading space. Now, if that's something that you're interested in, go right ahead and hit that subscribe button because it don't cost you nothing, right? And make sure you have that notification bell tapped so that you're always notified each week when we drop a video. Now, make sure you're smashing that like button because I'm ready to drop value. So let's get in on it. So let's get in on the basics. What exactly is Forex, right? I mean, Forex simply means foreign exchange, right? And you're basically trading one currency against the other. So if we go on the charts, for example, here we've got Euro USD. If you buy, right, you're betting the euro will go up against the US dollar. If you sell, you're betting the euro will actually go down against the US dollar. That's literally it, right? And here's the key. Currencies move because of supply and demand. Have you ever heard of that? I'm sure you have. They also move based on news events and economic strength. So you don't need to know everything, but you need to understand you're always trading in pairs, right? Within the foreign exchange market. So if we've got GBP USD here, it means that if you buy, you're betting that the GBP will go up against the US dollar. If you sell, you're betting the GBP will go down against the dollar. And that's literally it. So I want you to understand that simple framework. When we buy, we are looking at that base currency. So right here, we've got Euro, USD, and Euro is our base currency. And USD would be your quote. The base currency I call the boss. It's the one in charge, right? And of course, that represents what happens within that pair. So if the euro goes up in value, we look for buys. If the euro goes down in value against the US dollar, we look for sells. And that's literally it. So it's all about looking at your base versus your quote because we're trading in pairs within the foreign exchange markets, right? So what are the tools you actually need? You need a few tools to start your trading journey. Now, one of the number one tools that you're definitely going to need is a brokerage account. Now, for complete beginners, if you do not have a brokerage account, this is where you're able to tap into the markets. You need a brokerage account. I have linked the preferred brokerage accounts down below that you need that are regulated depending on where you are. So you have the ability to tap into those and use them to actually, plug into the markets. Right? You also need a trading platform. So that can either be your brokerage account may have a C-Trader, which is a web browser that you trade in, or you could literally be using your MetaTrader 5 to connect to the markets using your login details from your brokerage account, right? Or you could tap into TradingView because it's beautiful to trade with TradingView. All right, so if you're going to be using TradingView, right, we're literally on TradingView right now. And all you're going to be looking for is this section at the bottom here that's called Trading Panel. And when you click on trading panel at the bottom, you have the ability to click here that maximize the panel, and you can search for your preferred broker. You've got the preferred broker, and once you click on it, you will have the ability to log in by connecting your brokerage account. All right, and it will connect your details, whatever your details look like, it will connect it and you'll be able to, be plugged in. And I like trading with TradingView, so I'm showing you this option because it's my preferred one. Anyways, if you do not know anything about trading, I'd suggest that you use this paper trading account, connect a paper trading account, and start plug and play with your paper trading, and you'd have the ability to click trade here to be able to take your market execution, your limit orders, your stop orders, and all of that. Okay, so that's a simple framework in terms of getting you plugged into your brokerage system and your trading platform. There is a full TradingView tutorial. I've linked it here. You have the ability to go back and watch it as well. Okay, so that's that bit. Brokerage, connecting it with your trading platform. And of course, the next step is emphasizing the whole idea of paper trading. If you don't know anything, I'd suggest you start there. Don't just put money at risk as a complete beginner. Learn what you must, right? And as I said, start with paper trading, right? Which is your demo account, right? You're practicing with fake money. So you develop systems and frameworks and processes that actually work before putting your real money into the markets. We know you need money, but at the end of the day, you still need to know what you're doing before you go and plunge all your cash into your brokerage account. So make sure you line up that paper trading account. You can do it on MT5 as well with MetaQuotes demo, or you can do it right here on TradingView with your paper trading account. So those are the simple things that you need. Once you get plugged into this, then you're good to go, basically. All right, so you just want to understand that paper trading is a key part to start your journey, and then practice trading there. Trade as much as you can, document all of that, and then you're on your way. Now, here's the thing. I wouldn't do you any justice if I did not touch on risk management, because risk management is a crucial part of your survival plan. So here's the truth that a lot of people don't want to admit, but this is where it is. You have to understand that most traders, they don't lose because they've got a terrible strategy. They lose because they manage risk poorly. And you're not going to be one of them under my watch. So here's what you're going to do. You're going to do the opposite, because the majority of people who come into this trading space, they're looking at get rich quick scheme. And this is not it. This is a get rich slow. Okay? But at least if it's slow, it's sure. Because if it is that you decide to follow the instructions that I'm giving, you will have longevity. Now, it's very simple. You're going to be risking 1 to 2% max per trade. That means if you start your trading account with £1,000 or $1,000, you're only going to be risking £10 or $10 to $20 or £20 per trade idea, which gives you the ability to withstand losses, giving you the ability to catch bigger opportunities, because you don't have to decide that, okay, I've lost my 1,000 because I've been using big risk, now I've got to put money back in. You'd stick with the same 1,000 and you'll gradually grow it. Do not be in a haste. Understand that this race is for those who endure long enough. So your goal is to use proper risk management so that you are in the race long enough until you win. That's it, right? So I want you to follow that framework, because it's all about catching these wins, but practicing proper risk management whilst you work on developing the wins and stacking the wins, compounding your account. So remember that. All right, so here's where we get to strategy. Now, I'm going to be giving you a simple 3-step beginner strategy that you can begin to use. And of course, go use it on your demo account to prove that it works. All right, so here is how simple this is. Step number 1, you're really going to be marking your support and your resistance areas. So you can literally start from your higher time frame, so 4 hour, 1 hour, right? And you know, based on the type of trader you are, this video that's linked right at the top here would literally give you the ability to understand the best time frames to use. So you can just go back and watch that. So you're gonna mark your levels. So we've got our horizontal tool. We're seeing some support here that was resistance, and we're marking these zones because we have to know where, you know, we have a strong support and resistance on the charts. So let's pop it here. Good. And at the top, so we're marking these levels, okay? And you want to do the ones that are closest to price right now. So price is here, so these are the closest ones that we'll mark out. Once we've done that, the next step is we're going to be using our moving average. So we're going to come to our indicators tab, and we're going to look for exponential moving average. And when we get our moving average, which is our EMA, we're going to go into the settings, and we're literally going to pop that on 50. So we need the 50 EMA. All right, good. So step number 1, mark our zones. Step 2, we need the 50 EMA. Hope you got that. All right, so just a simple overview as it relates to your moving average. If we are above our moving average, that means we're bullish and we're looking for buys. If we're below, it means that we're looking for sells. All right, so above we're looking for buys, below we're looking for sells. In this case, you can clearly see that we're above our moving average. Now, being above, we want price and or moving average to meet at the same area, which means that if we've got resistance here that became support, which is one of our levels, once we get price meeting there, that's a high probability setup that you can take for a long position. And of course, you would have made profits. So let me show you an example of this, and you literally see how you can target here. All right, so we've got price right here that is sitting on top of a previous resistance zone. So we were rejecting here, we broke through, we're now sitting on top of this. Now we don't have a bullish engulfing candle as yet. We're literally just seeing wick rejections, which is good, but we're looking now to see if we can get more plausible confirmation to be able to take a buy, because we've been sitting above the moving average. So this is where we really zone in to see if we can get price sitting above, which is absolutely incredible here. You've seen that we've got that impulse move above our moving average. Okay, so this is giving us clear indication. Now let's see if we can get price to pull back into this moving average and reject all of it. We'll be able to take the setup there. All right, so ideally speaking, we're looking for price to come back and reject from our moving average, right? So we rejected here, pushed down a bit, right? And we're giving multiple opportunities here with wick rejections at this zone. So price was kind of playing in between here, but this wick rejection alone on the close of this candle, you know what, I could literally say, let's get in on a long on the close of this candle, because we're having multiple wick rejections here. Put our stop right below there, and we'll aim for our regular levels, which is back into the resistance zone, or we could just target our 1 to 3 as we normally do and see how that pans out. So that would literally be something that we could do, and there you have it, would have made profits. All right, so you would have seen that price was respecting that moving average. It came back, rejected multiple times off here. So that was just an added confirmation using your zones and your moving average to be able to even target, you know, bigger moves, because now we're fully above the moving average and we're still climbing. But at the end of the day, you would have been able to secure your 1 to 3 using that bit. So once price reacts to your zone, you're waiting for the reaction around your moving average, and of course from there you're able to look at price action to take the trade. And wick rejections, bullish engulfing candles, those are ideal. You didn't even have to close, you could have held. Just as we are holding above the moving average, you could have held that trade, because above means that we're still bullish and we're holding that trend. So that's a simple strategy that you could implement, and you'd be able to multiply as you continue to practice on your demo, document the journey to be able to lock in on some profits. Right? I hope you got some value from that bit. Now let's get into the psychological aspect, because this is a core part of trading. Now trading is 90%, I would say, psychology and just 10% strategy. A lot of it has to do with your psychology, and it has to be at the right place. Your mindset has to be at the right place to be able to execute on these charts. It's not just about what I teach you here, but you have to develop your character. It has to be built with resilience to be able to tackle the markets. It requires discipline, it requires patience. And a lot of times we don't have that as humans, and that's where our downfall is. So let's get into a bit of psychology. Now, psychological aspect is where a lot of traders fail, because they jump into random setups, they over leverage, they over trade, and a lot of times they don't even work on back testing the strategy to make sure that they make it into their own. And you have to understand that trading is a marathon. It's literally not a sprint, and you have to be ready for that marathon. You have to be patient, because patience pays. You have to be disciplined, because discipline pays. You have to be dedicated, because dedication pays. So stick to the rules and understand that you have to build rules for yourself, because that's what keeps you intact. That's what keeps you grounded, knowing that this is what you should do and nothing else. Okay, so one good trade is better than 1,000 bad ones. So I want you to understand that it's about quality over quantity. Spend time finding out how to navigate through high probability setups and double down on those. That's literally it. So to do a quick recap, we want you to understand the basics, which is the base versus the quote. And you have to understand that there are tools that you need to use. So your trading view, your brokerage account, all of that. And then of course, remember to protect your money, because that comes first, and then profits afterwards. Right? So protecting your money comes with proper risk management. Double down on that. And of course, use the simple strategy that I just showed you, or build one of your own. And of course, master trading psychology. Get the mind in the right place to be able to, mash up the markets and make profits from it. But if you follow these tips, guys, I guarantee you will not go wrong. Just follow the system that I've given to you. I've got years of experience in this, and I'm saying follow the system that I've just given to you in this video. If you do, you'd be good to go. With that said, I do hope you got some value from this. If you did, give me a like, and make sure you drop value in the comments so that I know I did you justice on this one. With that said, I'll see you in the next video, and remember to put God first in everything you do, because if he's in it, without a doubt you must win it. Bye.